it's 4.5%, uh, it's the expected only because it is the median among economists. But me myself, I think that's a pleasant surprise. If you just think of the African swine fever, the inflation in meat was 20% last month, and it's expected to be 20% still this month, last May, and yet it was less than that. And in terms of the oil, uh, mid May, it was $31 per barrel, $30 per barrel, and now it's $60 per barrel, which is a 100% increase, and a 100% increase in the price of oil calculates to a pressure of 1.5% increase in inflation. And yet the inflation in transport is less than 20%. I anticipated to be more than 20%. In fact, I anticipated the inflation peaked at 4.7% in February. I was anticipating that it could easily peak this month again, but it did not. It's just 4.5%. So it's a quite pleasant surprise. Uh, what we see now is the tapering off of the pressure in terms of inflation of the meat. So it's now 16%, and we expect it to be less next month. Uh, this month, June on June, it's June last year, the price of oil was $40 per barrel, and right now it's about $60 per barrel. So that would be it's less than 100% increase. So that's like it's going to be a 50% increase, which basically goes to say that the pressure is tapering down. Uh, so from this point on, we expect inflation to go down. I know 4.5% is still something that's undesirable, but it is a pleasant surprise because it could have been worse.
Can you say that with inflation tapering down, especially in the oil story, does this not highlight the fact that our economy is not, the recovery is not underway? If our demand for transport, for example, or the oil prices are not spilling over into our demand for transport, to what extent can you say that, it's a healthy increase in inflation, which, for example, in the rest of the global markets or in the US, they're actually sort of welcoming that?
Well, it's you could call it a level effect. The fact that inflation bottomed in roundabout September of last year. In fact, inflation last May was 2.8%, I think. There's a saying, what goes up must come down. In this case, what goes down must go up.
Hmm.
So we had an abnormal low inflation last year because of what is referred to as, what Paul Krugman refers to as the Corona coma. That means all economies were put in a coma. It was induced in a coma to shut it down, just to beat the virus. And now it's just recovery. It's, what goes down must go up. And that's basically what's happening.
Can you say, you mentioned that it's going to be easing? Is that going to be the case even when the economy reopens?
Oh yeah, it will ease up, uh, but ease up not enough to the extent that the annual average is still going to be more than 4% inflation, perhaps more 4.4 or 4.5% inflation average throughout the year, which is, again, it's still a pleasant surprise. It could have been worse, but ideally it should have been less.